The United States government just wrote a $1.6 billion check to become a major shareholder in a mining company. Not a loan, not a grant. Equity, ownership. This is the largest government investment in rare earth minerals in American history. And it happened on January 27, 2026, less than 72 hours ago. The Commerce Department now owns 16 million shares of common stock and 17 million warrants in USA Rare Earth. This is not normal. The federal government does not take equity stakes in private companies, except now they do. Since Trump's second term began, they've done this 10 times. 6 of those 10 deals are in the critical minerals industry. The question isn't why they're doing this. The question is what they know that you don't. Because when a government moves this fast to secure a supply chain, it means the supply chain is about to break. And when you see what China just did, you'll understand why this became a national emergency. My name is Alex, and I've spent the last decade tracking commodity cycles and federal resource policy so you don't have to. I read Commerce Department filings and International Energy Agency reports at 2 in the morning because I'm either incredibly dedicated or need better hobbies. If you want to understand where money flows before the headlines tell you, make sure to hit that subscribe button and give this video a thumbs up if it helps you see what's coming before it arrives. Before we dive in, I want to know, do you own any exposure to rare earth metals or critical minerals? Physical, stocks, ETFs, anything? Drop it in the comments. I'm genuinely curious where this audience stands on something most people don't even know exists. Here's what's happening. The United States just went all in on a bet most investors don't even know is on the table. And the bet is this: China's stranglehold on rare earth minerals is about to become the biggest geopolitical leverage point since OPEC controlled oil in the 1970s. Except this time, the resource isn't energy, it's everything that makes modern technology possible. And we're about to find out if America waited too long to build an escape route. Let me show you what dig baby, dig actually means. Because this isn't about oil anymore. It's about the 17 elements you've never heard of that run your entire life. Rare earth elements. 17 obscure names on the periodic table that sound like a chemistry test you failed in high school. Neodymium, dysprosium, terbium, praseodymium. You don't need to remember the names. You need to understand what they do, because every electric motor uses them. Every wind turbine, every F-35 fighter jet, every iPhone, every Tesla, every data center cooling system, every precision-guided missile, every MRI machine, every hard drive spinning in a server farm right now keeping the internet alive, all of it runs on rare earth magnets. And rare earth magnets require rare earth elements. There are no substitutes, there are no workarounds. You either have access to these materials, or your technology doesn't work. And here's the thing nobody wants to say out loud. China controls 90% of global rare earth processing, not mining. Processing. That's the distinction that matters. You can dig these elements out of the ground anywhere. The United States has deposits. Australia has deposits. Canada has deposits. But getting raw ore out of the ground is step 1. Turning that ore into usable material requires a processing infrastructure that takes decades to build and billions to scale. China built that infrastructure 30 years ago. The rest of the world didn't. So even if you mine rare earths in Texas, you have to ship them to China to be processed. Then China ships them back as finished magnets. That's the trap. And in October 2025, China activated the trap. New export controls. If you want to export rare earth processing technology, you need a license from Beijing. If you want to export rare earths that were processed using Chinese technology, even if that processing happened outside China, you need a license from Beijing. If you're a foreign company that wants to supply rare earth products made with Chinese methods, you need a license from Beijing. China didn't ban exports, they just made it illegal to teach anyone else how to do what they do. That's not a trade policy, that's a choke point. And the effects showed up immediately. April and May 2025. Rare earth export volumes from China fell sharply. Car makers in the United States and Europe couldn't get permanent magnets. Some cut production. Some shut down factories temporarily. European rare earth prices spiked to 6 times the price in China. 6 times. For the same material. That's what happens when one country controls the valve and decides to turn it. Now here's where it gets even more interesting. Heavy rare earths. Elements like dysprosium and terbium. These are the high-performance materials. The ones that go into military applications, aerospace, the magnets that operate in extreme conditions. China controls 99% of global processing capability for heavy rare earths. Not 90%, 99%. If China stops exporting heavy rare earths tomorrow, the United States cannot build the weapon systems it currently builds. Cannot. Not, it would be expensive, cannot. The supply chain ends. The International Energy Agency published a report in 2025 that should have been front-page news and wasn't. For 19 out of 20 strategically important minerals, China is the leading refiner. Average market share? 70%. This isn't about rare earths. This is about the entire foundation of industrial civilization. Lithium, cobalt, graphite, nickel, copper refining. China dominates all of it. And it happened while everyone was arguing about trade deficits and tariffs. So when the Trump administration announced a $1.6 billion investment in USA Rare Earth on January 27, 2026, it wasn't a business deal. It was an acknowledgement that the current system is a national security crisis. Let me break down what that money is actually buying. USA Rare Earth is building a mine-to-magnet supply chain entirely on American soil. The Round Top deposit in Sierra Blanca, Texas. A magnet manufacturing facility in Stillwater, Oklahoma. The Oklahoma facility is supposed to start commercial production in the first quarter of 2026. That's now. The Texas mine starts production in late 2028. By 2030, they're targeting extraction of 40,000 metric tons per day of rare earth and critical mineral feedstock. If they hit those numbers, this becomes one of the largest rare earth operations outside China. The federal funding package includes $277 million in direct grants from the Commerce Department, $1.3 billion in loans from the CHIPS Act, and the government is taking equity, 16.1 million shares of common stock, 17.6 million warrants. That gives the Commerce Department roughly a 10% ownership stake. The stock surged 9.6% the day the deal was announced. It's doubled since the start of the year. But here's the thing you need to understand. This isn't the first time the federal government did this. It's the second. July 2025. The Department of Defense purchased $400 million of convertible preferred stock in MP Materials. MP Materials operates the only functioning rare earth mine in the United States, Mountain Pass in California. After that deal, the Pentagon became MP's largest shareholder with about a 15% stake. That was the first time in history the federal government took an equity position in a critical minerals company. 6 months later, they did it again, and they're not stopping. Since January, the feds have taken ownership stakes in 10 companies. 6 of those 10 are in critical minerals. Let me read you a quote. This is Howard Lutnick, Secretary of Commerce, January 2026. USA Rare Earth's heavy critical minerals project is essential to restoring U.S. critical mineral independence. This investment ensures our supply chains are resilient and no longer reliant on foreign nations. That's government speak for we screwed up, we're 30 years late, and we're now spending billions to fix a problem we should have never let happen. Because here's what the market missed. MP Materials got more than equity investment. The Department of Defense agreed to set a price floor on MP's light rare earth products. They guaranteed buyers for all magnets produced over the next decade. The government is not just investing, they're creating a guaranteed market. That removes price risk. That removes demand risk. If you're an investor looking at MP Materials or USA Rare Earth, you're not betting on the free market anymore. You're betting on a federally backstopped monopoly. Now let me tie this to something bigger. The Supercycle Thesis. Last rare earth supercycle ran from 2000 to 2014. That was driven by China's infrastructure build. Demand for steel, copper, rare earths, everything went parabolic. Prices followed. Then China's growth slowed. Commodity prices collapsed. We've been in a bear market for critical materials for over a decade, but 3 secular trends are converging right now that could trigger the next supercycle. AI boom, energy transition, defense rearmament. AI data centers use rare earth magnets and cooling systems, hard drives, power infrastructure. Every new data center Microsoft or Google builds requires tons of magnetic materials. Energy transition. Every wind turbine uses about 600 pounds of rare earth magnets. Every electric vehicle uses significantly more rare earth content than a combustion engine. If the world actually tries to hit net zero carbon, rare earth demand goes vertical. Defense rearmament. We're in the largest global defense buildup since the Cold War. Every missile, every jet, every advanced radar system is rare earth intensive. All three of those trends are happening simultaneously. And here's the supply side problem. There has been massive underinvestment in new mines for over a decade. Average development time for a new mine from discovery to production? 16 years. You can't just flip a switch and create new supply. Even if prices spike tomorrow, new production won't come online until the 2030s. That's the setup for a supercycle. Demand rising on multiple fronts, supply constrained by decade-long development timelines, and a geopolitical rival that controls the entire processing chain, deciding when and how much material the rest of the world gets to buy. Silver, by the way, has been in a supply deficit for 7 consecutive years. The world uses more silver than it mines every single year. The above-ground inventory is being drawn down. Why does that matter? Because silver is also a critical industrial metal. Solar panels, electronics, EV charging infrastructure. If you believe in the energy transition, you have to believe industrial silver demand goes higher, and there's no new mega supply coming. The largest silver deposits are byproducts of base metal mines. When copper and zinc prices are low, silver production falls. It's not a primary market, it's a side effect. So you've got rare earths, lithium, cobalt, silver, copper. All the materials required to electrify the economy, all of them facing structural supply deficits, all of them dominated by Chinese processing. And the federal government just started taking equity stakes in the companies trying to build alternatives. Now let me show you the risks, because this is not a guaranteed win. USA Rare Earth warned investors in their filings that there is a risk they may not be able to turn Round Top into a producing mine. They're a development stage company. The Texas mine doesn't start until 2028 at the earliest. That's 2.5 years away. A lot can go wrong. Permitting delays, cost overruns, technical challenges in processing. Rare earth extraction is chemically complex. The refining process involves nasty acids and generates toxic waste. There's a reason China does most of it. They're willing to accept the environmental cost. Western countries have stricter regulations. That makes it harder and more expensive. Rare earth prices are volatile. If China wants to crush competition, they flood the market and drop prices. They've done it before. In 2011, rare earth prices spiked. Everyone rushed to develop new mines. China responded by increasing production and collapsing prices. Most of those new mines went bankrupt. It's called predatory pricing. Drop your prices below cost, drive competitors out of business, then raise prices again once you've re-secured the monopoly. The only reason that strategy doesn't work this time is because the US government is backstopping the industry. MP Materials has a guaranteed buyer. USA Rare Earth has federal funding. You can't bankrupt a company when the Pentagon is the largest shareholder and has committed to buying everything you produce. Technology risk. What if someone invents a substitute? What if magnet recycling scales up faster than expected? What if solid-state batteries don't need as much lithium? Those are real possibilities, but they're long-term. In the next 5 to 10 years, there is no substitute for rare earth magnets in electric motors. There's no alternative to lithium in batteries. The technology might change eventually. It's not changing tomorrow. Geopolitical risk. What if the US and China actually go to war? Not a trade war, actual war. Over Taiwan, over the South China Sea, over something we can't predict. If that happens, rare earth supply chains are the least of anyone's problems. But short of that, this is the Cold War of the 21st century. It's not about nukes, it's about supply chains. Whoever controls the materials controls the future. So here's the pattern you need to see. The federal government is not investing in rare earths because they think it's a good business. They're investing because they've concluded that dependence on China for critical materials is a national security threat that can no longer be tolerated. And when national security drives investment, profit becomes secondary. That changes the risk-reward calculation for private investors. If you're buying MP Materials or USA Rare Earth, you're not betting on free market dynamics. You're betting that the federal government will do whatever it takes to ensure these companies succeed, and the evidence suggests they will. MP Materials' deal included a price floor. That's unprecedented. The government is saying, we will not let rare earth prices fall below a certain level because we need you to stay in business. USA Rare Earth got over $3 billion in combined backing when you include the federal package and the $1.5 billion inflection point agreed to invest. That's not normal venture capital, that's strategic capital. The question for you is whether this is an investable trend or just an interesting geopolitical story? And the answer depends on your time horizon. If you're looking for a quick trade, rare earth stocks are volatile and news-driven. One headline from China, one permitting delay, 1/4 of missed production targets, and the stock can drop 20%. If you're looking at a 5 to 10-year view, and you believe the three megatrends I mentioned, AI, energy transition, defense buildup, then the critical minerals thesis makes sense. Because even if USA Rare Earths mine gets delayed, even if MP Materials has a bad quarter, the structural problem remains. The world needs these materials. China controls the supply. And the US government has decided that's unacceptable. This isn't financial advice. I don't know your situation. I don't know your risk tolerance. But I do know this. When a government starts taking equity stakes in an industry, that industry is about to get very strategic very fast. And strategic industries tend to get funded regardless of short-term profitability. You're watching the early stages of a supply chain war. It's not tanks and missiles. It's mines and magnets. It's refining capacity and processing technology. It's the boring, unsexy infrastructure that makes everything else possible. And for the first time in decades, the United States is playing catch-up. They're 30 years behind. They know it. And they're spending whatever it takes to close the gap. The real question is whether it's too late. Because building a rare earth supply chain from scratch takes time. USA Rare Earths mine doesn't start production until 2028. By then, China could tighten export controls even further. They could cut off heavy rare earths entirely. They could make it functionally impossible for non-Chinese companies to access the materials needed for defense production. That's the nightmare scenario. And it's why the federal government is moving so fast. Here's the thing about supply chains. They're invisible until they break. Nobody thinks about where their iPhone components come from until there's a shortage and the new model gets delayed. Nobody thinks about rare earth magnets until the car factory shuts down because they can't get motors. And nobody thinks about Chinese export policy until it's weaponized. We're in the phase where it's being weaponized. October 2025's export controls were the warning shot. The question is, what comes next? If you're an investor, this is the part where you have to decide if you believe the thesis. Do you believe AI data center growth continues? Do you believe the energy transition is real? Do you believe defense spending stays elevated? Do you believe China maintains its leverage over critical materials? If you answer yes to all four, then exposure to critical minerals makes strategic sense. Not as a gamble, as a hedge. Because if any of those trends accelerate, the companies that control non-Chinese supply are going to be worth significantly more than they are today. And if you're just someone trying to understand why the government is suddenly buying stakes in mining companies, now you know. It's not corruption. It's not cronyism. It's cold calculation. The people making these decisions looked at the supply chain data and concluded that the United States cannot afford to remain dependent on a strategic rival for the materials that power modern civilization. And once you see that data the way they see it, the billion-dollar investments start to make sense. So what do you do with this information? You can ignore it. Most people will. Rare earths are boring. Supply chains are boring. Geopolitics is boring until it's not. Or you can start paying attention. Watch what the government does, not what they say. They just took equity in 2 rare earth companies in 6 months. If they do it again, that's a signal. If rare earth prices start moving higher, that's a signal. If China tightens export restrictions again, that's a signal. The boulder is already rolling. You just have to decide if you're going to get out of the way or figure out how to ride it. Because dig, baby, dig isn't a slogan, it's a strategy. And the strategy is this: rebuild the supply chains we gave away, secure the materials we need to compete, and do it fast enough that China's leverage doesn't become permanent. 10 years from now, you'll look back at this moment and realize this was the inflection point. The moment the United States decided it couldn't outsource national security to the lowest bidder anymore. The moment critical minerals went from niche commodity markets to strategic imperatives. And if you're paying attention now, while the boulder is still gathering speed, you'll understand what's coming before the rest of the market figures it out. Your future self is counting on you to see the patterns that others miss, to understand that the most important investments aren't always the loudest or the sexiest. Sometimes they're buried in Commerce Department filings and mining permits and export control regulations that nobody bothers to read. So here's my question for you. What's the next critical material nobody's talking about yet? Silver, gold, rare earths, lithium, copper. What else should we be watching? Drop your thoughts in the comments. Because this channel exists to dig into the topics that actually matter, and I want to know what you're seeing that I'm not. The game just changed. Most investors aren't ready, but you are, because you made it to the end of this video. And that means you're the kind of person who does the work, who reads the fine print, who sees the boulder before it hits. That's the edge. That's how you win. Not by being the smartest, by being the most prepared. And preparation starts with understanding what just happened on January 27, 2026. The day the federal government went all in on rare earths and signaled to anyone paying attention that the supply chain war is no longer theoretical. It's here.